Welcome to the Keiser Report. I'm Max Keiser. My word is my bond has been the motto of the London Stock Exchange since 1801. Since 2008, however, the motto of the world financial markets has been my bond is your debt problem. My word, are your problems about to get quite big? Stacey?
Now, Max, remember back in 2008 when the financial markets were collapsing all over the world, who was bailed out? Really, it was the bondholders of all these, basically the banks around the world and the governments around the world. And no example was more egregious than Anglo-Irish bondholders because they were unsecured bondholders and they were bailed out. Well, today we hear Anglo payout U-turn sparks uproar. Revelations that junior bondholders at Anglo-Irish Bank who are seeking payouts of up to 280 million euros could be given a bonanza windfall just as the first water charge bills hit hard-pressed families next spring have provoked uproar. Speaking in the Dáil, Finance Minister Michael Noonan was accused of a U-turn after he admitted the Anglo payments could happen despite previous insistence that this was unlikely.
Right. Well, this is the interesting part about the whole Irish story because it's held out by the Troika, the EU, the IMF, and who else is in the Troika? The EU, the IMF,
and
the ECB, European Central Bank. And they hold up Ireland as the poster child for success in their program to resuscitate these economies that became asphyxiated due to oppressive bond proliferation that choked the life out of these economies. But it's only a case of recovery if you take out of the picture the fact that 100 billions of euros were paid from unsecured creditors and now junior creditors, and that money was essentially confiscated from the population that's now being asked to suffer things like water charges. So it's not unlike Cyprus that confiscated money from people's bank account. Anglo-Irish, in cahoots with the Irish government, including Michael Noonan, got together in a corporate banking relationship, government corporate banking relationship, which reminds a lot of people of fascism, and they confiscated wealth. And those people are suffering as a result. So it's a recovery only in the sense that you don't include half the population.
Now, back in 2007, 2006, 2005, as we were leading up to the financial crash, all of these bonds were AAA rated. So they could be bought by anybody. There was investment grade, so pension funds, governments, everybody could buy them. Well, that encouraged more and more lending. So the government, the banks, say Goldman Sachs, for example, was a creditor, was a bondholder of Anglo-Irish. They got bailed out, but they therefore took no risk. They should have been punished for not doing their due diligence and looking into Anglo-Irish's books and seeing whether or not they could repay this. Now, cut forward to today, because of that financial crash, we cut interest rates to 0%, ZIRP as it's called. And what has happened is, well, we have pension funds and other investors around the world seeking yield, chasing yield, and they've been pouring money into junk bonds. And no sector of the junk bond market is bigger than the energy sector. It accounts for 18% of all high yield bond issuance. The second biggest sector, just for comparison, is 7% for healthcare. So it's by and large, the junk bond sector is the energy sector. And up until June, that sector was only yielding 5.6%. So that's what, remember, you often talk about U.S. Treasury bonds were yielding back in 2007, 2008. So basically, they were treating the fracking sector, essentially the shale oil fracking sector, as like a sovereign government debt, almost. And cut to this headline, Max, falling oil prices could lead to massive junk bond defaults. Should oil prices fall below $65 per barrel and stay there for the next 3 years, Tariq Hamid, a high-yield energy analyst at JP Chase, estimates that up to 40% of all energy junk bonds could default over the next several years. Energy companies, the fastest-growing segment of the high-yield bond market in recent years, accounts for nearly 18% of all outstanding high-yield bonds.
Well, you make a great point there about using interest rates to bail out bad creditors. So Anglo-Irish was a bad creditor. They'd made unsecured loans, and those loans went belly up because they were not good business for that bank. They made silly loans. But the state decided to interfere with the markets. And this is horrible in an economy that proposes to be a free market economy. As a result, those cheap interest rates then sent a false price signal to those who were raising money in the fracking business. They could raise money in the so-called junk market and pay only 5% yield on an obligation on that business. So they got a lot of money into the fracking business, even though the fracking business, if you look at it economically, is horrible. You make no money on it. It's all debt financed, and then the wells peter out after 2 or 3 years. So it's therefore, it's a hoax in terms of economy. But it came to be because the central banks sent horrible price signals by setting interest rates very, very low to bail out their friends in this highly fascistic system. Remember long-term capital management.
Yeah, let's call it corporatist because there's no leg breaking. Most people think of fascism as like smashing knees and killing people and putting them in ovens. What we have now is corporatism. They don't do that. They don't need to do that because you suffer there as a chump because their bonds are your problem. So you're the one strapped inside your house, tied to their, your debt Sherpa, essentially. You're carrying their debt on your back, keep sustaining this economy. And the reason why the junk bond market in terms of the shale oil, all they had to do is make the payment on the interest. That's it. Pay the interest as long as they could pay the interest, which is why more and more and more and more and more and more money was required to keep it going just to pay the interest. So whether or not it collapses now, whether the whole thing goes boom, now the JP Morgan Chase analyst says he predicts that not many companies will default in 2015 because many companies have hedged their exposure, but he expects that energy companies will run into trouble in 2016 as even the most conservative energy companies will see most of their hedges run off. But so he's saying they're hedged, right?
Well, they're not hedged. We know from 2008 that they're not hedged.
Exactly, but there's a counterparty. Usually you have to have somebody on the other side of the trade.
An insolvent counterparty.
Yeah,
they're
exactly.
insolvent.
So there's somebody.
They're not hedged.
There's somebody that has to pay this other side of the hedge.
And it's market failure.
Exactly.
Market failure. They call it fascism. They call it corporatism. It's market failure. Look at America. They artificially depressed the price of corn for high fructose corn syrup. And you end up with 150 million obese, waddling Americans with diabetes. That's market failure because they won't let markets do what they're supposed to do and clear at a market-driven price. It's market failure. It's, obviously the beneficiaries of this are the military, the corrupt politicians, and what I would call the brown shirts or the black shirts. They're fascists, and whether they go to the ovens or whether they don't go to the ovens is moot, because in Ireland they're cutting them off from their water supply, so they will dehydrate.
Okay, well, dehydrated humans, but
like an apricot, like a dried apricot, like dried fruit, a dried shillelagh stick. They're already dry.
Well, surely their bond portfolio could be dried up and like an apricot soon. So junk bonds backing shale boom facing $11.6 billion in losses. Bond investors who help finance America's shale boom are facing potential losses of $11.6 billion as oil prices plummet by the most since the credit crisis. So there has been $90 billion of debt issued by junk-rated energy producers in the past 3 years.
And it's all worthless because it's collateralized by a corrupt system, a bankrupt system. The banks are still insolvent. The major banks behind the issuance of the junk bonds supporting the fracking industry, forget the fact that the fracking industry itself is economically unviable. The banks themselves are insolvent. So, you have an economically unviable industry collateralized and financed by insolvent institutions that are underwritten by an insolvent central bank that's run by corrupt dictators.
So we told everybody about the money piling into this junk bond market. We warned you back in June of this year when the yields on junk bonds for shale oil were 5.68%. Now they are 8.54%. So as you see, that's a collapse basically in the junk bond market for energy market. But oil continues to fall, and this is the mentality of the shale oil producers who want to get the patriotic investor on their side. Just like during World War II, they got people to buy, treasury bonds to support the war effort. America defiant an oil war with OPEC. International Energy Agency says that most producers in the North Dakota's Bakken Formation can remain profitable even if oil falls to $42. U.S. shale producers are surprisingly resilient. They will drill as long as they have cash flow from their operations.
This is why America is going to war with like Russia. because they want to get Americans to buy junk bonds in this collapsed shale market. I saw it, I've seen it many times working on Wall Street. It's the saber rattling pitch. When people run out of money, and you try, World War II, they had the bonds, the freedom bonds, et cetera. I mean, this is what, to really get that last drop of cheap money from suckers. You rattle the saber and saying, we're going to war against, quote unquote, whatever, pick some enemy, it's all propaganda to sell ostensibly worthless piles of dog poop to keep hedge fund operators in Greenwich, Connecticut afloat so that they can make yacht payments on their 85-foot Hinckleys that they're having custom made somewhere in North European country. I think it's Sweden or Sweden. I think the Hinckleys are made. It's a really fine boat, all wood. I had one for a brief period of time before the crash of '87.
Wow. Well, so let's go over that quote again. This is from Per Magnus Knifsman, who sounds like not a Swede, but perhaps a Norwegian, of Rystad Energy. He said, they will drill as long as they have cash flow from their operations.
Sounds like a porno film.
Exactly. But it is, in a way. I mean, they're pouring money into this absurd thing, and as long as the patriotic consumer out there, the patriotic investor, continues to give money to a system that doesn't make any financial sense.
Right. Markets are driven by fear and greed. So the greed factor brought markets up to a certain level, and then people ran out of money. So now they're hitting the fear card. Like, unless you put all of your money into these worthless fracking junk bonds, then hordes of the enemy will come over the border and steal your babies.
Yes.
A dingo stole my baby!
Well,
that's an Australian version of this pitch.
Well, it depends on, so, we saw back in 2008, the financial markets collapsed. We bailed out bondholders. Now we're going to bail out junk bondholders, perhaps in this next crash. We'll see soon enough.
Right, and they're going to use bail-ins, which means they just take the money right out of your bank account. All right, well, we must be bailing along. I just made that up. Thank you.
Okay.
Well, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Stephen Pear of BitPay.com. Full disclosure, after interviewing BitPay's Tony Calippi on this show a few years ago, I became an investor in BitPay along with Richard Branson, Peter Thiel, Ashton Kushner, and a bunch of other folks. Stephen, welcome to the Keiser Report.
Thanks for having me.
All right, Stephen Pear. Of course, you were CTO of the company. Now you're CEO of the company, correct?
That's correct.
Okay. So I invited you on the show after reading this headline at Coindesk.com. BitPay project aims to do for networks what Bitcoin did for currency. Tell us about the project, which you call Foxtrot.
Yeah, well, Foxtrot was solving a need that we had in our Copay multi-signature wallet.
All right. What is a Copay multi-signature wallet for those who might not be familiar?
A Copay multi-signature wallet is an open source wallet that allows multiple people to participate in a wallet, and you can set rules like you need 3 out of 5 people to sign a transaction, for example. But we had a need to coordinate a transaction proposal among the people in that wallet, and then distribute that proposal, and then people either sign it or they don't sign it. And that need for that communications is what drove the development of Foxtrot.
Okay, so when you say need for communication, the Bitcoin protocol, this is the revolutionary aspect of that blockchain technology, because you get consent and trust that's disintermediated. There's no central authority. So this is an application or an extension of the brilliance of this Bitcoin protocol, and you're just essentially using that philosophy almost and extending it to a need that you had, which is security.
Yes, exactly. We're using a lot of the Bitcoin technology to implement a new routing protocol that allows these participants in these wallets to securely communicate with one another and create these transaction proposals. Now, Foxtrot today runs on top of TCP/IP, but it's conceivable that it could run alongside of TCP/IP, and routers could route Foxtrot packets directly. We also anticipate a future where you would use Bitcoin and something called payment channels in Bitcoin to pay for the bandwidth that's routed between nodes. But that's not in Foxtrot today, but I'm sure in the future that will be in there.
Okay, let's back up back up a little bit and talk about BitPay, because basically it's for those who are maybe not familiar, it's merchant processing.
Correct.
So merchants can sign up and they can take Bitcoin using BitPay.
Yep.
And so since you guys have started the company, you've been wildly successful, I would say. How many merchants are signed up to BitPay?
We're up to 50,000 now.
50,000 merchants. And the total volume of transactions per day in the Bitcoin space, if I remember serving memory, is something like $1 million a day now?
I don't know. The overall transaction, yeah, you can't measure all the activity because some of it happens off blockchain. But,
okay, it's pretty significant.
I haven't looked recently, though.
Yeah, it's high, and it's certainly trending a lot higher. You know, the growth is impressive. When people say that Bitcoin, and the way to look at Bitcoin is to look back to the growth of the internet back to 1994. You know, the internet was there; it had been there for years, and then this thing called the browser came along, and Netscape, and went public, and suddenly it became the internet as we know it today, and the growth took off. And people say that Bitcoin is at that moment where it's very popular, people are using it, and it's just now hitting that level where suddenly it becomes ubiquitous. Do you agree with that kind of thinking?
I think we're still a couple of years away from that, but we've yet to see Bitcoin's killer app, and there's a lot of talk about decentralized databases, side chains, being sort of that killer app for Bitcoin, and I agree with that. I think in a couple of years you're going to see that technology mature, and then you'll have a new wave of excitement and enthusiasm around that technology and what you can do with it. It disrupts not just a lot of people talk about how Bitcoin disrupts the banking industry, but you can imagine a Facebook, a Twitter, Reddit, and GitHub, all of those services where you have this centralized network effect suddenly being decentralized by this technology that people are talking about. So it's very exciting, but it's still a few years away. You
know, when governments and regulators wave an opinion about this, have an opinion about it, they are, of course, defending their turf in a lot of ways. I mean, governments like the centralized power. Central banks, by the very name, are central banks.
Right, exactly.
The banking industry has consolidated. The too big to fail. It says it all. They're too big to fail. They're too big to jail. That's a consolidation. That's a centralization. So here comes Bitcoin, which rips the cover off this. It decentralizes. It distributes. It disrupts. It challenges the oligarchy. So they're going to push back, Stephen Pear. Are they going to? Where are we on that fight between the central planners and the Bitcoiners?
The only way I know to deal with that is to try and educate people. So we talk to them and we try and teach them what the technology can do and how they can actually use it as well. It remains to be seen what's going to transpire, but when you talk about too big to fail, the way to solve that is to not have entities that are too big to fail, and the way you solve that is to make them decentralized.
Right, so Stephen, you were the Chief Technology Officer, you're now the CEO of BitPay, so naturally you have a certain way to describe this in terms of technological terms, which are, I guess you could say pretty high-end in terms of where that's all coming from. And so when people hear about Bitcoin and BitPay, they ask themselves, well, that sounds really interesting, but what's in it for me? And one of the greatest use case studies for Bitcoin, it would seem, at the moment, sweeping the globe, is what's happening to money transfer companies like Western Union and others. And they are being challenged in a way in the remittance market. Can you talk about that?
Yeah, we get asked the question, is charging 0% for transaction processing sustainable? And I kind of turn around that and I say it is sustainable, but what's not sustainable is charging 2 to 3%. And when you look at money transfer, all you're really doing is manipulating information in a database. Whether it's a decentralized database or a centralized database, you're just flipping bits. And the cost of that is so low that it's hard to imagine a future where you're going to really pay anything for transfer of money anywhere in the world, right? So, yeah, that has tremendous implications for companies like Western Union.
Right. Over the holiday season, for example, Western Union ran an ad like, send your loved ones $100 for the low fee of $5. And the Bitcoiners ran a parallel ad that said, send your loved ones $100 for the low fee of $0. Right. So because they can't compete with 0. necessarily. But this distinction between
but companies like Western Union they have something of value there, and those are those retail locations where people actually go in and engage in business with them. So there may be some other services that they could provide. They could become a place where you could go buy and sell Bitcoins, perhaps. So.
Yeah, that would be great. They become
awesome.
the Bitcoin ATMs.
That's right.
At the former Western Union office.
That's right.
They could make some money that way.
They certainly could.
I wouldn't be buying that stock, though. Now, tell us, this distinction between Bitcoin as money and Bitcoin as technology.
Mm-hmm.
So when the regulators sink their claws into it,
right.
What's the someone made a fantastic comment about Skype, that Skype became ubiquitous because they never called it a telephone service.
Right.
And because if they did,
That's
the
right.
big telephone companies would have shut it down.
Right.
They called it something else. And Bitcoin has the word coin right there in the title of it. So naturally, even Jamie Dimon, a troglodyte like that, can figure out that maybe it has, he said himself, Bitcoin's trying to steal our lunch. So do you call it a currency? Do you call it money? Do you call it technology?
Sometimes I call it internet too. I think that would have, in many ways, been a better term for Bitcoin, because if you look at what it can do for networks, like what we're doing with Foxtrot, what it can do for signing of contracts, what it can do for metered bandwidth, there are so many applications of it. When you look at the blockchain, it's a digital record of human history. It's about a lot more than just a history of payments. You can embed any kind of information in that history, and it's trustlessly verifiable, and you can't alter that history. And that has enormous implications that go far beyond money. So yeah, I agree with you. It's some ways it's unfortunate that everybody got focused on this one application of the technology, and they started thinking of it as money, and that certainly causes a lot of people anxiety when you start talking about money. But there are tremendous applications beyond what we see.
Yeah. Okay. So the money is just the first application of many on this decentralized blockchain technology. Now, MasterCard has been reported that they've begun lobbying against Bitcoin. So here's another example of this. So, it's the old, first they ignore you, then they ridicule you, then they fight you. So initially everyone dismissed Bitcoin. Now MasterCard realizes it's an existential threat.
Right.
So they are pulling out all the stops. Where are they in all this at this point?
Well, I don't know. I can't speak specifically for MasterCard, but I think all of the incumbents in the financial industry, it's not necessarily the case that they're just going to go away. They can find a way to use the technology or to leverage the assets that they do have to build something around this new future. So I think you're going to see a mix. You're going to see companies like MasterCard really strongly pushing against it, but then you're going to see other ones that actually invest in it and see what it's capable of and see it for its benefits. And
now, according to MasterCard, their argument is that, well, for Bitcoin, you need a trusted third party, especially since the collapse of Mt. Gox. So they're arguing, they don't understand Bitcoin, number one, obviously.
Right. Yeah.
But they know that they can play to the crowd because the crowd knows this whole idea of having a central bank and a trusted middleman. But that's their argument. So their argument it's dead on arrival, essentially.
Right. I mean, the whole point of Bitcoin is you remove the need in a lot of circumstances for a trusted third party, and you allow people to engage directly with one.
It would be great if these trusted third parties could be trusted.
That would be great.
But unfortunately, we have discovered you can't trust them.
Right.
The banks, the central banks are in cahoots with the big banks, and the big banks are in cahoots with the money launderers and the market manipulators. So you can't trust them. But you can trust mathematics.
You can.
You can. 2 + 2 = 4.
It always will.
So, and Bitcoin is based on mathematics.
That's right.
That is unimpeachable.
That's right. That's
and there's a limited number of supplies. So you guys continuing.
Yeah, what drew me to Bitcoin was that computer science innovation.
I thought it was a show that drew you into Bitcoin. No, go ahead. I'm sorry.
Yeah, no, I worked with something called DigiCash years ago. I was a fan of it. I didn't work for the company, but that got me thinking about this problem. And then I read the Satoshi white paper, and immediately I understood what they had done, what the Byzantine generals problem that they had solved.
Right. The problem being you can't trust sending a message out there to the field because it gets screwed up along the way. Is that a good synopsis of that problem?
Yeah.
In other words, the entire network is verified. Well, we have about a minute left. And I wanted to ask you this question, which it's popped up a few times. People say, oh, they love the blockchain, but they hate the coin.
Yeah, I mean, that's like saying you love the internet, but you don't like HTTP. I mean, it's silly.
Yeah,
it's
because, okay, the coin is the token given to those who are putting up their computer power to verify the blockchain.
That's right. All those computers that are securing that payment network are securing that coin, not a different coin, right?
Yeah.
So that's, you know, when people ask us about altcoins and whether BitPay will process them, you know, there are a couple prerequisites, a couple hurdles that those altcoins have to overcome. One is the security of the current Bitcoin network, and the second is the liquidity in the market. So an altcoin would have to surpass Bitcoin in both of those respects, in which case we might accept that altcoin and only accept that altcoin. But that's a really tall hurdle, you know. At this stage of Bitcoin's growth, it's already orders of magnitude bigger than all the altcoins combined.
Right, the Bitcoin market is something like 95% of the entire crypto market.
That's right.
So nothing even comes remotely close.
That's right.
Well, Stephen Pear, CTO and now CEO of BitPay, thanks so much for being on the Keiser Report.
Thank you, Max.
Okay. Well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Stephen Pear of BitPay.com. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.